Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 1st of December, Tuesday. So in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at yesterday's market movement, we can see gold further losses by 0.56%. The pair of GBP US dollar climbed higher by 0.16%. The dollar index bounded by 0.23%, while oil retracing by 1.09%. So let's get into details with the headlines of today. First off, we have the oil, where crude oil had ended the month with more than 26% gains following the set of positive vaccine news throughout the month of November. Now, oil traders are currently struggling to push prices back above the pre-pandemic levels even before the official release of the vaccine and the resumption of airline operations. Now, why the airline operations play an important role towards the oil price, as the airline sectors is one of the highest oil consumption sectors, and thus it contributes a lot to the global oil demand. Now, investors are hoping for the OPEC Plus to extend the current supply cuts of 7.7 million barrels per day through the first quarter of 2021, instead the initial plan of 5.8 million barrels cut. Now, with no official statement released from yesterday's meeting, today's final meeting would provide some direction for the oil prices. So if they have failed to agree on the extension of the supply cuts, then they will carry out with the plan of 5.8 million through the first quarter. So instruments involved here would be crude oil itself and Canadian dollar, as Canada is one of the major oil exporters and the economy depends highly on the prices of crude oil. So moving on, let's take a look at the pound, where the pound was able to hold on to gains despite Monday's dollar rebound and the resurface of Brexit uncertainties. Now, little progress were made on the Brexit talks after the United Kingdom rejected the European Union's offer on fishing rights last week. Now, furthermore, discussion on other key sticking points such as the level playing field are still on hold. So with little time left and little progress made for a deal, uncertainties are building up regardless of how optimistic officials and investors are. So what we can expect this week might be some breakthrough through the Brexit talks. However, failure to do so might provide strong impact or pressure onto the pound. So instruments involved here would be pound itself. Moving on, let's take a look at the news release we have for today. So please take note, time stated here are at GMT plus 8. So the first data would be at 11:30 in the morning, where the Reserve Bank of Australia will be releasing the rate statement and its interest rate decision. Now, although interest rate decision is widely expected to remain unchanged at 0.10%, what investors would focus on would be the rate statement, where it would signal what further actions would the central bank take in order to provide further support for the Australian economy. Now, any dovish points in the statement would provide pressure onto the Australian dollar. And at 9:30 p.m, Canada will be releasing its monthly gross domestic product data, where it's expected to fall lower from previous month of 1.2% to 0.9%, signaling an overall contraction throughout the last month. So any reading below the forecasted value would actually exert pressure onto the Canadian dollar. And at 11 p.m, the US will be releasing the ISM manufacturing PMI, expected to fall lower as well from previous month of 59.3 to 58.0. However, the reading above 50 still signal an overall expansion for the manufacturing sector in the US. So any reading higher than the forecasted value would actually provide support for the dollar. And at the same time, the Federal Reserve will have a testimony led by Jerome Powell. So in the testimony, the chairman will most likely discuss on the latest issue, which is the number of rising infection rates of the COVID-19 in the US, and also to touch a little bit on the previous take back from the government, the Congress, namely the US Treasury's Steve Mnuchin, where he has advised or instructed the Fed to return any unused funds that were initially targeted for the pandemic package in order to support the economy. So the Federal Reserve will most likely discuss on this issue, and also what other efforts that will be taken by the central bank in order to further support the US economy. So that's all for the news release. Moving on, let's take a look at the technicals. So here's an overview of instruments to be covered. First off, Euro Canadian Dollar H4 showing a downtrend, GBP JPY H4 showing an uptrend, CAD CHF H4 also in an uptrend, and oil in its H4 chart still in a strong uptrend. So let's get into details with the chart analysis, starting with the Euro Canadian Dollar. So overall, as you can see, the pair is still continue to be traded within a downtrend, overall downtrend, and we can actually construct Fibonacci from the previous high, connecting the shadows and shadows. We can see that the pair has been trading within the 61.8 Fibonacci as a resistance and the 38.2 as a support level. However, overall MACD still in a bearish momentum, suggests the pair to extend lower after successfully breaking below the 38.2 Fibonacci near 1.5470. So overall, cautious investors are advised to consider short positions only after the breakout below the 38.2 Fibonacci, with a stop loss placed 30 pips from the level at 1.5500, and a take profit can be targeted all the way towards the 23.6 Fibonacci near 1.5410. However, for aggressive investors, can actually enter short positions at the current level 1.5500, with an anticipation that the pair will not be breaking above the downward trend line, which is also close to the 50.0 Fibonacci. So stop loss should be placed 40 pips at 1.5540, and a take profit can be targeted all the way towards the 23.6 Fibonacci at 1.5410. Next, for the pair of GBP JPY, overall we can see that the pair continues to be traded within an uptrend, where the pair has rebounded off the upward trend line. So overall, to get the resistance and the support level, we will connect the shadow from the lowest point towards the highest point, and we can see that the pair has actually managed to break back above the 23.6 near 138.9. So overall, MACD signaling a biased bullish momentum. Thus, investors are advised to consider long positions close to the 23.6 Fibonacci near 139 or 138.9. With a long position, stop loss should be placed below the 60 moving average, which is also the upward trend line at 138.5 to be safe, and a take profit can be targeted all the way towards the resistance level near 139.8, and a further resistance would be the 0.0 Fibonacci near 140.3. Now, however, do look out for a potential breakout below the upward trend line, as we have covered in the fundamentals. If there were to be any updates on the Brexit talks, and especially in a more negative way, that would actually provide a big impact and pressure onto the pound. So after the breakout, if the pair does break out below the upward trend line, the pair might be heading for a change in a medium-term trend towards a downtrend, and investors will are advised to consider short positions after the breakout below the 38.2 Fibonacci near 138. Next, for the pair of Canadian dollar Swiss franc and the H4 chart. So overall, the pair is also being traded within an overall uptrend, being supported and constructing the Fibonacci from the shadow towards the shadow over here. We have obtained levels, resistance and support levels, and we can see that the pair is currently testing near the 23.6 Fibonacci, which is also the psychological resistance at 0.700. So cautious investors are advised to wait for a breakout above before entering into long positions for the pair. Stop loss should be placed 50 pips from the level at 0.6950. Which is also below the upward trend line, and the take profit can be targeted all the way towards the 0.0 Fibonacci at 0.7050. Now, for a longer term target profit would be close towards the next resistance, which is also a new high close to 0.7070. So however, for aggressive investors, if the pair fails to break above the 23.6 Fibonacci, the pair will most likely play sideways, trading below the resistance and also trading above the upward trend line. Thus, aggressive investors can then take the opportunity to enter into short-term short positions. Stop loss should be placed right above the 23.6 Fibonacci and a take profit targeted all the way to the 38.2 Fibonacci near 0.6960. Lastly, for oil in the H4 chart, now the key support and resistance line should be at 43.5, which is the support, and a near-term resistance would be 46, and a targeted resistance would be the 48. So overall, the oil continues to be traded within an uptrend. However, we do expect some technical correction, most likely playing within this level. So as far as oil doesn't break back below the 43.5 resistance as a support level, the commodity might still be trading within an uptrend, and investors are advised to consider long positions just right above the support level at 43.5, or investors can actually wait for the breakout above the 46 to enter into a long position for the crude oil. So overall, it is still positive in terms of fundamentals and technicals for the oil, but please take note that overall trading for the oil as a commodity carries a large risk, and proper risk management should be applied when trading for the crude oil. So aggressive investors can actually take the opportunity to consider short positions if oil managed to break below the 20 moving average, which is also the psychological level of 45. So after the breakout below 45, aggressive investors can take the opportunity for short-term short positions with a stop loss of 50 pips and a take profit of 100 pips all the way towards 44. So that's all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next time on our market briefing, and happy trading to all.